Imagine you're standing on the edge of a diving board. It's a warm, sunny day, and the pool below is calm and inviting. But there's a catch. You can't see the water. It's covered by a thin layer of fog, and you have to decide whether to dive in without knowing exactly what's beneath you. This is a lot like investing and managing risk. Every financial decision involves a leap into the unknown, and how you handle that uncertainty is what we call risk management. Now, let's get into what risk really means. Risk isn't just a four-letter word to fear. It's a constant companion in our financial journey. It's the unpredictable twists and turns of the market, the surprises in our personal lives, and the changes in the economy. Some people might think of risk as something to avoid, but in reality, it's something to understand and manage. Risk is like that fog over the pool. It's always there, but with the right tools, you can make an informed leap rather than a blind one. The first step in understanding risk management is realizing that not all risks are created equal. Some are more significant than others, and part of your job as a savvy investor is to figure out which risks are worth taking. For example, putting all your money into a single company's stock can be a risky move. That company might succeed beyond your wildest dreams, or it might falter and take your money down with it. Diversifying your investments, spreading them out across different stocks, bonds, or assets, is like having multiple safety nets under that diving board. Consider how people approach risk in everyday life. We take calculated risks all the time, like driving a car or trying a new restaurant. Financial risk should be approached with the same level-headedness. Think of it as cooking a meal without a recipe. You need to understand your ingredients, in this case, your investment options, and have a sense for how they work together. You're not throwing things in blindly. You're making educated guesses based on your knowledge and experience. One crucial part of risk management is self-awareness. We often hear about fear and greed as the dominant forces in the financial world. These emotions can cloud judgment and lead to impulsive decisions. Fear might cause you to sell an investment too early because you're anxious about market fluctuations. Greed might push you to chase trends without considering the risks. The key is to recognize these emotions for what they are, natural human responses, and not let them drive your decisions. It's about finding that inner calm, much like a steady hand on the wheel during a storm. A mental model that helps in managing risk is thinking of your investments as a garden. Some plants will thrive, some won't, and others will take time to blossom. You nurture your garden by watering it regularly and removing weeds, just as you would monitor your investments and make adjustments as needed. This metaphor highlights patience and diligence, important qualities when managing risk. Investing isn't a get-rich-quick scheme. It's a long-term commitment that requires attention and care. Now let's talk about tangible strategies. One fundamental practice is setting limits on how much you're willing to risk. This could mean establishing a budget for your investments or deciding on a percentage of your portfolio to allocate to riskier ventures. These limits serve as guardrails, keeping you on the path and preventing emotional decisions from crashing your financial goals. Another helpful tool is doing your homework. In the financial world, knowledge truly is power. Understanding market trends, company news, and economic indicators can help you anticipate risks and make informed decisions. It's like going into a big presentation at work. You prepare by knowing your material inside out, so you're ready for whatever questions come your way. Remember, risk management is as much about mindset as it is about strategy. Having the right attitude means accepting that losses are part of the game. Like in any aspect of life, setbacks are opportunities to learn and grow. The best investors aren't those who never fail. They're the ones who learn from their failures and adjust their approach accordingly. As we wrap up our exploration of risk management, think back to that diving board. The next time you face a decision, financial or otherwise, remember that risk is inevitable, but it's also manageable. By understanding risk, controlling your emotions, and making informed choices, you can dive into the unknown with confidence. Reflect on this. Managing risk is not about eliminating uncertainty. It's about navigating it wisely. And in doing so, you're not just protecting your wealth, you're building a foundation for long-term success.